Hello, and it's Monday, and yes, the crash is getting even more serious. I mean, this has been a very good call. I don't get all my calls right, but this call's been good, and so why am I smiling in the midst of a collapsing stock market? I mean, the Australian market's extremely bad today, just as I said it would be. I'm smiling because we're short, and I think a lot of people are angry at me because I'm saying it's going to crash and sell and doing well out of it. But the people who are long and heavily invested and angry at me, you're exactly the people I'm trying to help. I mean, I couldn't have tried to help you more. I do not expect this to be a short-term phenomenon. I think I've made that clear previously. This is a major equity market top that could last, who knows, 1, 2, 3, 6 years. It's at least going to last 3, 6, 18 months. And it's going to fall 20 to 30% as a good result. The risk is that it's a 50% correction over, sort of 1, 2, 3, 6 years. Even if it goes sideways for 3 or 6 years, it's not a great investment at this point. Now, if you're someone who just has to buy because you think the only way to make money in markets is buying, well, there'll be other markets that could be going up. Gold and oil have had a correction. I'm nibbling at those, buying those again here. Geopolitical tensions are unfortunately rising sharply in the Middle East, and Wall Street likes to compartmentalize these wars, but they're expanding, and you can't ignore them. They're going to impact consumer and business morale in Europe and across the Middle East. That means a slowing global economy on top of manufacturing globally already being in recession. It doesn't matter who wins the presidential election. Harris is going to make it a much closer race than I thought she would. I still think Trump will get across the line, not because I necessarily want him to, but just because that's how the numbers still stack up. But I think it's going to be very close now, whereas previously I didn't think it would be close. But that doesn't even matter. It does not matter to the economy at this point, which is beginning to topple over the edge in the US and Australia, and we're not getting any policy response to save those toppling economies, and therefore they're going to be a deeper recession and for longer than needed to be the case, because people in Washington just wanted to believe the US economy was strong so they could win the election, whereas they should have been saying, US economy's rolling over, there's some really significant structural problems, we need to take some policy response to this. And the Federal Reserve should have been saying, well, we don't control inflation as much as we used to, and the US economy is slowing. Manufacturing's been in a depression for 2 years, because that's what a depression is, and no one's done anything to rescue it. In fact, the Fed's just raised rates. So what do they think the outcome's going to be? So if you're in equity markets, you're still long. Look, you don't sell out of everything, but you sell out of everything except the good stocks, names that make real products, provide real services that you think will still be standing after a deep recession. Maybe hold those, but even hedge those positions with your indices and your futures trading, the US 500, Dow, NASDAQ, etc. And if you want to do really well, be like the Kennedys, sell everything, go short, and then buy back at 10 cents on the dollar for some stocks perhaps in 1 to 2 years' time. The Kennedys got rich doing this. You can too. Have a great day.